navigate this treacherous S-REIT market. This has been a terrible S-REIT market for the last 19 months. Now, how does one actually navigate it? Let me share with you in this particular video, as I shared with my GCP Global Investor students in our last class on 9 September. That was actually last week. Now, just take a look at this first chart. This is the FTSE index at the crossroads. You can see, ladies and gentlemen, that it's been a long downtrend as enumerated by the blue line since the last 1.5 years, when the Fed first increased interest rates on 17th of March last year, 2022. Now, the market's coming down. It's not just one straight line. It's actually punctuated by a couple of rallies. As you can see, by the orange line is actually 1 up, 2 up, then it's down, 3 up, 4 down, and then they try to find a base at the 700 level. And you can see, as what we have shared with our GCP Global students, they broke the 700 this time around. It's really bad after 3 tries. Now, what lies ahead for the S-REIT market? That's basically what we want to know. And this is actually the second chart, which shows you that essentially when we enter a period when interest rates are on the rise, there will be periods of days between 25 days to 3 months where the markets can be down, and in this case, you can see that the magnitude of the severe sell-off can range from something like 6% to as high as 18%. But really, how does this compare to previous sell-off? Now, this is by far now the largest and the longest sell-off. You can see that in times of normal market corrections, this is actually where the 19 months of market correction, and we are down by more than 22%, the largest by far in S-REIT history. So how does one actually navigate, as what I've shared in my investment class? But first and foremost, in rising interest rates, we have already forewarned since last year, before interest rates starts to move up, that the key thing is to treat REITs as trading assets, not as for investment. So the days like in 2019, after the increase in interest rates episode in 2018, where you just buy REITs and hold them, it's gone. Okay, so in preparation for this year, we already say that you should be taking profits and essentially trade the REITs, because they will have trading range, particularly so when you have competition coming from the bond market. Now, you can see, ladies and gentlemen, that the bond market currently, whether it's actually 6 months or 1 year, pay you something like 3.5%. A very good alternative than putting your money into real estate investment trusts. Now, there's something that we've learned since last year, and bonds that's issued by MAS of 5-year, 10-year, 20-year, and 30-year tenor essentially fetch you even 3%. And come the end of this month, there will be a 30-year bond that's actually up for auction basis that you and I can actually buy. So can you therefore understand that when it comes to competition for your funds, the earlier adage that just put in REITs because they pay you dividends regularly is long gone, because you have to understand, ladies and gentlemen, that when REITs compared to other instruments is no longer as attractive, you need what we call a risk premium to compensate you. And right now, REITs are not giving you that kind of risk premium. So in our classes, of course, we share with you the episodes in which risk premium are sufficient to compensate you, the investor, or if not. And if that's the case, then you basically should just be running out of REITs. Now, first and foremost, understand my background. I am possibly Singapore's youngest head of research. Before that, way back 1992, and then I went to work in Wall Street for 3 years. Then when I came back to Singapore, I headed the institutional sales arm of a couple of stockbroking companies before I retired. I made enough money to retire in my early 40s. And I was fortunate. One of the key things I did was actually follow essentially where the funds flow is. Now, essentially, if I may actually paraphrase Dr. Sun Yat-sen, he says that the things that affect markets and conditions are actually vast and wide. Those who follow it flourish. Those who do not follow it well will actually not flourish. So, if I may, to paraphrase into our markets, it's very simple. Markets basically follow closely the funds flow. If you follow it well, you will flourish. If not, you will not persist. So hence, do not be surprised. Now, in my recent class, ladies and gentlemen, on 9th of September, I've shared that I have sold off my position as a top 20 shareholder of Capitaland Ascendas India. And guess what? What I told my class students was that, was there any fundamental reason to be selling off Capitaland Ascendas India? Means anything wrong with the REITs? The answer is no. But why did I still sell it off? And in a big way, and therefore I think I'm no longer their top 20 shareholders. Now look at the chart, ladies and gentlemen. Now this is one of the rare conditions, as I have mentioned, in the two orange line, where the share price went down to as low as 106. That's because Capitaland Ascendas went for a rights issue at 1.06, and for the first time, ladies and gentlemen, in the history of Singapore rights issue, whatever excess shares that you applied for was actually fulfilled, and essentially that's what we did. So it's a no-brainer especially when you need to raise liquidity, in this current condition where liquidity is most important for you to actually take advantage of the bounce in the market, to be able to get to that. But before that, if you take a look at the shareholding, you will notice, ladies and gentlemen, as of the 2011, in the latest annual report, I was listed at the 16th largest shareholder of Capitaland Ascendas, with 1.676 million shares. So essentially, how did I become then, that their top 20 shareholders then in 2011? That was because during the pandemic in 2020, the share price of Capitaland Ascendas, look at the chart, plunged severely from as high as 180 down to below $1.10. And for those who attended our 2020 REIT classes, we told you that this was one of the best buy opportunities. Turned out that we were right, at below 110. Look at the first circle, it bounced all the way back up to $1.60. Of course, we did take some profits again, and this time around, when it actually fell to the second circle, which is enumerated and coincided with the raising of funds via the rights issue at 106, it's a no-brainer buying 106. It's a no-brainer being hit 100% for your rights that you apply for, that means those that you're entitled, plus the excess. Now we got a huge amount, and so when the price bounced up to 118, you notice that essentially this is where we sold. And during our email classes, now for those who come for our classes, not only that we answer your questions during the classes, but if you have further questions pertaining to any particular stock after the class, you can always email us. And this is what we shared with one of our long-time students who has attended our class for more than a decade, Mr. Helmi Hamza. I've mentioned that, hey, I've sold my shares at 1.18, and you can see that essentially the reason is very clear. You get excess allocation, at 106. So for 1 million shares bought at 106, selling it at 118, you made cool profit of 120,000. That's for 1 million shares. Can you imagine if it was more than 1 million shares? So this is again what we've shared in our classes. Now let me just show you this particular one. This is a contract, that I have with Maybank. You can see that enumerated by the orange line. I've sold off 356,000 shares, at the price of close to 1.16, and I got back 412,000. Now this, of course, was one of the big sale, and then when it went up to 117, another big sale, 118, another big sale, and that's why I reckon that I will have ceased to become their top 20 shareholder. You can see, ladies and gentlemen, that raising liquidity in a market condition like this is paramount for the health of your investment portfolio. Now, the reasons, ladies and gentlemen, sometimes is essentially very clear, but sometimes, ladies and gentlemen, going into a downturn as what we have now, the first thing as what we have done and prepared so in our classes is this. Just last year, this is my 联合早报 interview way back in September last year, where we told you that gearing ratio is the first thing we watch for REITs. So be prepared, as what we have mentioned in the report that is actually quoted by 联合早报 on Friday, 20th September last year. We mentioned that stay clear of Suntec REIT, stay clear of Elite, stay clear of Manulife. Just look at their prices this year compared to last year. They have crashed by more than 50%. You can see that we also talk about ARA Hospitality. It has underperformed simply because the gearing ratio. So the first rule going into and navigating this treacherous market is to recognize that REITs will not perform if interest rates actually go up too sharply, and this is what we have done. Secondly, as what we have mentioned in our Ascendas, Capitaland Ascendas, even there's nothing wrong fundamentally with the REIT. Take a good time, especially if there's a good bounce, like between 106 and selling at 118 and raising close to a couple of millions, so that you are always liquid to get into the good trading opportunities offered by a down market. So thirdly, understand that in a downturn, do not have bad REITs in your portfolio, because that will drain your mental energy. So for example, one of our students, Mr. Lok Chiping, mentioned that he attended our classes last week and he quickly took his profit on Capitaland Ascendas India after my sharing, and he had a capital gain of 9.2%. Mr. Lok Chiping has been attending our classes for the last 8 years, and essentially he has actually requested that we guide our students after I do my sales, so on and so forth. So once again, ladies and gentlemen, this is again my personal sharing. It is not investment advice. So essentially, just understand that the few things, even in a treacherous market, you can still make money, as what we have done in writing the book, Making Your Millions in Real Estate Investment Trust. And two, do not get so demotivated, so downtrodden, because markets do recover, but you must be in a liquid position to be able to benefit from it. That's one of the reasons why we sold off our position and making good profits on Capitaland Ascendas India. So once again, till next week.